Hello there and welcome to Business Unusual, the webinar series where business leaders lean in on other business leaders and specifically what they're thinking and what they're doing in this most unusual business environment we've ever been put in. My name is Karen Lam and I'd just like to thank you very much for tuning in, and especially a big thank you for those of you who've posed questions when you registered for this session. I've included them into today's conversation. So I am thrilled today to introduce to you and really to get into the mind of one of Southeast Asia's most active venture capitalists. He and his partner started 500 Startups Vietnam back in 2016. And that's 4 years ago. And already they've grown their portfolio to 60 plus companies under their watch. And of course, we've heard of 500 startups, which started, of course, in Silicon Valley, 2,000 companies, 70 countries to their names. And the VC venture, especially when it's focused on startups and growth companies, it's an extremely high stakes game. 90% of startups don't make it. And so the VC playbook has to be about casting their nets wide, providing as much capital, as much support as possible to make sure that at least 1 out of 10 of their portfolio companies make it to unicorn status and becomes a runaway success. So in this global slowdown, though, the question is, how are investors shifting their focus? What are they shifting their focus to? And what about business leaders? How can they take their cue from these investors and from this money trail? Well, this is where I bring in the general partner of 500 Startups Vietnam, Binh Tran. Binh, xin chào, how are you?
Xin chào, I'm doing well. Thanks for having me. And good to speak to you again after a couple years. I remember doing the show a few years ago.
That's right. So you are in Vietnam right now, in Ho Chi Minh City, and Vietnam is ahead of the rest of us here in Southeast Asia in establishing some kind of normality with the lifting of the lockdown. What's it been like?
Well, I moved here. Seems like a genius move, but it's very accidental. I had planned to move myself and my family to Vietnam. We landed here in mid-January, and then the virus hit. And so we went through a series of lockdowns the first 3 weeks of April. Those started to ease up. So where we're standing now, we have approximately a month of no community spread. A little over 300 cases, 0 deaths. So the people in the community here feel very confident that Vietnam has this really under control. Businesses are back open, and the streets are filling up again. So as of just maybe a week and a half, 2 weeks ago, domestic travel started to continue, and I think that they're almost in full swing now. And we have international flights resuming in June. So this morning, we got our 3-year-old daughter getting ready to go to schools for the first time. So things are looking really good over here.
What's the vibe there, though? Like, are people confident? Are they moving around? What about this social distancing thing?
Yeah, definitely. I feel that people are not respecting it as much just because there's so much confidence in the air. I think when social distancing easing started happening the last week of April, you saw a lot more folks with masks and such. But after a month of no community spread, people are still wearing masks. People are still, staying at distance in lines. But I do feel that a lot of folks are starting to not wear masks and go out and feel a little bit more normal.
So I don't want to give our audience the impression that you're new to Vietnam, even though you've just arrived with your family 2 feet in Vietnam early this year, because for the last 4 years since 500 Vietnam started, you've really been clocking in a lot of air miles, traversing the globe between San Francisco, where you were from, and Ho Chi Minh City. So you're not new to this game, and you're definitely not new to Vietnam.
Yeah, and I think what is new for Vietnam and the region is this is the first downturn for the tech sector. And so, I remember, launching my company, my last company in Silicon Valley in 2008, about 4 months before Lehman Brothers collapsed. And so that downturn definitely made it hard to fundraise. Capital was very constrained. I believe it took us almost 2 years to raise our seed round. And
I'm going to be touching a little bit about that in a while and just tap into that experience of starting the company in at the time of the global financial crisis in 2008. But let me return to that. For now, though, for those of you who've been following this webinar series, you do realize that the typical format is a conversation between me and my guest with questions thrown in from the audience. Well, today I've decided to take a slightly different tack. I've brought in another business leader, someone who's in the thick of action, who would do with some thoughts and some ideas from Binh. So he's a business owner of a tech company called FlexiRoam, and FlexiRoam provides a global roaming service to travelers. It's listed on the Australian Stock Exchange, headquartered in Australia with its operations in Kuala Lumpur. So it's not exactly a startup. It's been around for the last 9 years, but just like every other company on this planet, it is going through the throes of this storm. So I'd like to welcome Jeff Ong, CEO of FlexiRoam. Over in KL, how are you doing? I believe it's day 62 of the lockdown. How's business?
Business is definitely impacted. I mean, the unprecedented COVID-19 has hit us, but I guess for us, we're operating on a global scale. So between December to February, we can see the downturn of the travel and coming down, and our revenue definitely has been impacted up to 90% over the past couple of months, right? But still good. I still got my new haircut up, so, right.
A haircut in both senses, really. Okay, so I will get back to you, Jeff, in a little while. I want to give the rest of you a little bit of a backstory of Binh's so that you understand where he comes from. As you can see and hear, he sounds American, he looks Asian, he's got a Vietnamese name. So Binh was born in Vietnam. His parents took him and his siblings, the whole family, out of Saigon just before its fall. And they resettled eventually in the United States as refugees, and he's done fantastically for himself. He started and sold several companies, the most notable of which is the one that he referred to earlier, Klout. Now, Klout is a social scoring app which he started in 2008 with his partner, sold it off about 6 years later in 2014 for a whopping sum of 200 million US dollars. So I've always teased him about this, that he should be sipping pina colada somewhere in the Mediterranean, or at this time be in the Antarctica, out of reach of the coronavirus. But he chose to step back into business, this time as a VC. So Binh, for such a time as this, would you rather be an entrepreneur or where you are right now as a VC overlooking 60 companies?
I'll tell you. Well, first, that an exit of 200 million is a drop in the bucket compared to the exits having today. And when you think about the VC track and the amount of money you raise, it's definitely not enough to put you on an island for the rest of your life. But that said, I mean, it's a tough time for everyone. I think, especially entrepreneurs. It's you're making these possibly the toughest decisions you'll have to make as a business leader in your lifetime. This is a incredibly trying time. It's going to try the way you communicate. Communicate to your employees, to your investors, to your family, and so it's definitely hard time to be an entrepreneur right now.
Mhm. Yeah, it is. So, which is why this program was started, to really just give business owners that leg up, some idea, and hopefully some camaraderie, if you like, with other business owners as well. So let's start off very quickly with where 500 Vietnam is. So the last time we met, flashback, was in 2017, and that was about a year after you started 500 Vietnam. At that time, do you remember how many companies you had under your watch?
Yeah, I don't. I
Let me
do remember that
remind you. Let me remind you. You had in 2017 about 10 companies that you had invested in. Fast forward 3 years later, you've grown that portfolio 6 times to 60 plus companies. Explain that exponential growth.
Yeah, that's always been our strategy. Is we're early stage investor, so that means we're writing really small checks, and our average check size is about $100,000 US. And at that stage and that check size, you're really going in early before companies have, a abundance of customers. Sometimes they just launched their product, and so you really have a huge set of unknowns, which means you've got a really risky investment within each of your positions.
Mm.
So for each investment to kind of play out and return money to your investors, you really have to build a large portfolio, diversified portfolio, the earlier you go.
Mm.
And so that's always been our investment strategy from day one. Where we've seen potential changes is that, we have always had the thesis of Vietnamese tech talent, as well as a more regional growth story of the middle class. We're seeing now, because of the talent coming from venture-backed companies that have grown here, we're seeing a lot more Vietnamese founders get to that scale of more regional or global aspirations. So we're seeing a slight shift in the type of founders we're investing in over the years.
So we're looking just at Vietnamese companies that you invest in?
No. So our investment thesis is largely the growth of Southeast Asia and how Vietnam plays a role in that growth. And so we believe Vietnam has the largest concentration and number of high quality software engineers in the region. And so if we can help companies, teams, founders anywhere really tap into that resource, as well as potentially sell products and services to this market, 100 million people, kind of rising middle class, a large SME, B2B customer base, then we think we can potentially add value and then earn ourselves on the cap table.
So one of these companies, a good example right now, is a company that originates from Ontario. I think congratulations are in order, because they're your first unicorn that you've invested in. It's Apply Board. Now, Apply Board links international students with universities in the US and in the UK, Canada, and today it's a unicorn. Tell us a little bit about that venture and how it applies to your thesis.
Yeah, so we met the founder about 3 years ago, and he was raising a seed round, and the problem he's trying to solve is just help international students get into North American schools. And we know that the Vietnamese population here sends a lot of its students overseas. A lot of them end up in North American schools. So the value that we pitched to the founder was that we can help them really enter this market, or establish a large presence here, as well as set up a team. And so, I was sitting in San Francisco at the time, got to meet the founder, this amazing individual. And that was just a short 3 years ago. So the phenomenal rise it has been just, it's definitely an outlier. You don't see companies growing that fast. And when they started to fundraise their last round, it was pre-COVID. And so we saw them kind of tackle still a successful raise, but definitely experienced issues around, telling a story that involves COVID, how they're going to be able to address their dependence on travel, and and go through a fundraise where you're seeing investors pull out.
Mm. So yeah, so where are they in this environment right now where people are holding back? Education is one of the, especially international education, is one of those areas where students, or should I say parents, are holding back on for a little bit.
Yeah, so I think, as VCs, we're always long-term investors, so we always have to ask ourselves, what has changed and what doesn't change after COVID. COVID is eventually going to end. We'll find a vaccine, and the world will go back to certain behaviors that it was pre-COVID. There's certain things that will change fundamentally. Higher education might be one of them, right? So if you think about certain schools really focusing on content versus credentials, they're putting their content online. They're making that available. And so what does that mean to their credential side? And if you are a digital student and you're able to buy or participate in the content for Stanford, why would you go to UCLA? So there's some fundamental things happening in higher education that I think will need to play out. But I think in Applied Board's case, the schools they support. So their business model is this: it's free for students, and the schools pay a portion of the tuition. And so that tuition is full price tuition. And so if you think about these schools seeing their tuition drop dramatically because of COVID, post-COVID, they're going to really need to get that revenue back, and they're going to need to have diversity within their campuses. And I think when it comes to borders, international borders being much more strict, well, the one of the easiest visas to overcome that is the student visa. So I do think they're going to be well positioned in the long run to continue to grow and be a very, very successful business.
Indeed. So what sort of well, let's talk about pre-COVID, and we'll talk about post-COVID in a while. But pre-COVID, what were your expectations of your returns?
Post-COVID?
Pre-COVID.
Pre-COVID. Yeah.
What the difference is?
Well, so pre-COVID, obviously we're flying really high. I think in VC there was already some, potential corrections that are in place. You saw certain companies valued at tech multiples, and they weren't really tech companies like WeWork. You're seeing business models being challenged, like Uber and the on-demand markets. So I think there were some movements towards a correction pre-COVID, but that just got accelerated with COVID.
So
for
what
us
right now?
I'm sorry?
What would it be right now?
Right now, we've done a good scrub of our entire portfolio. So over the last months, I've just been incredibly busy, just meeting with every single company, helping them think through their runways, their planning, and for the most part, a large portion of our portfolio has been, discretionally marked down. We've gone and taken a conservative approach to making sure that our investors aren't surprised. But in light of that, we have categories of companies that are positively affected, right? So we have, I think, companies in general, when they knew by March what bucket they landed in. Either they're positively affected, severely affected, moderately, or neutrally. And so the folks that, it's a smaller bucket, but there are folks that are in that positive category.
Okay, give us a number, Binh, on what you would be expecting overall from your portfolio, give and take, averaging out the what's hot and what's not.
I mean, without giving specifics, yeah, I think according to PitchBook and Crunchbase, we're still a top decile performing fund. So we're with these markdowns, we have these enough markups that, and when I say markdown markups, they're basically what we assign, venture capitalists assign to the value of each company. Mm-hmm. And in terms of markups, we don't value that until we know a price per share that another investor has paid. So it's typically another financing round. But for markdowns, we do it discretionary. For example, a pandemic that affects travel. We're going to take our travel startups and we're going to mark those down discretionary so that we set the expectations for our founders. So even with those markups and markdowns, we're doing really well, I think. Okay.
So you're still keeping your figures very close to yourself.
Yes.
All right. So speaking of travel, this is a good time for me to bring Jeff in. So Jeff, you're in the travel business, and you did say that you've been hit. 90% of your revenue has been shaved off. What questions have you got for Binh?
Well, I guess having experienced that impact from the COVID, and we have put in crisis management and how we can actually prepare ourselves for a potential rebound, right? So one of my questions I have for Binh is that, do you see that there could be a potential short-term rebound or a mid-term rebound or a long-term rebound to going back to the level that we used to be? Right?
Yeah, I mean, maybe back in February. So I when we talk to our companies, it's really trying to help them identify themselves as what bucket they belong to, right? And unless you're in the positive bucket, you really are making mostly defensive moves. You are really trying to figure out, how to survive. And this depends on the stage of the company as well. But if you're positively affected and you are maybe in a growth stage, Series B and later, what a great time to start hiring.
So what are the some very practical defensive moves that you would advise your investees companies who are severely impacted or moderately impacted per se?
Yeah, if you're moderately and neutrally, I mean, it's really about survival at this point. You are obviously the biggest cost center for most companies is going to be labor, and unfortunately, that's going to be the I guess most impactful way we can extend your runways to make those layoffs. The other piece here is trying to figure out how to best collect cash. If there's a fundamental cash flow operation here, is just to make sure that's efficient and that your customers are able to pay. If you had any R&D, if you had any non-revenue effort going on, you definitely would want to reconsider postponing that or cutting that completely. And I think if you're severely impacted, besides doing all these defensive moves, you have to be offensive as well. You have to pivot, and I think that's one of those things that it's uncomfortable, but it's really hard to do. But it's definitely potential saving grace for a lot of companies.
Yeah, so Jeff has some plans up his sleeves in terms of pivoting. So we'll again get to that in a while. But for now, so you've mentioned some of the companies, especially in travel, that aren't doing very well. What about the companies that are doing very well in your portfolio? What are those?
Yeah, we have companies in edtech, in remote working, grocery delivery, gaming. I think mental health, healthcare, e-commerce. You've seen e-commerce. You look at the U.S. e-commerce market over the 10 years. It's just been steadily growing, and within 8 weeks, it's double. I believe it's around 30% now of all retail online now. And then there's AI and automation. So there's certain categories that are lending itself to be positive. Believe it or not, coffee is one of them.
Yeah, yeah, coffee. So have you noticed any change in consumer behavior?
I think it's too early to tell in terms of lasting behaviors, but yeah, immediate behaviors are going to be, things that are going to be online, right? So, this kind of digital buzzword of digital transformation that's happening over the last few years, it's happening within 2 months. You have 10 years of digital transformation in 2 months, and so you're really looking at a very exciting time for technology companies. Technology companies demonstrating that they're an essential need, and then for an investor like myself, I'm quite excited about what's going on in the next couple of years.
So tell me a little bit about this. You mentioned this coffee company. How did this come about? How are they doing well in this environment?
Well, I think first they're online and they're direct to consumer as well as subscriptions, so they're able to continue to serve customers as a shelter in place, shelter at home, as long as the logistics infrastructure is still there. But it goes back to kind of like what doesn't change, or during this, there's still these kind of fundamental hierarchy of needs, and it turns out beyond having a place to sleep and having food, people need coffee.
Yes, we do, definitely.
Yeah, so I think they've benefited, and I think they have to ask themselves now: is this a behavior that continues? Is it something that doesn't last? And is it an opportunity for them to be bold and get market share?
So were they already an online business, or did they were already pre-COVID?
They were online as well as offline, and so their offline business was primarily around groceries, like supermarkets and retail of that sort. So that also grew. So, but their focus and direction was towards more online.
Yeah, I mean, most of the e-commerce, you're mentioning about e-commerce, right? So, I mean, the fundamental question that I have is actually, is e-commerce as a platform or digitization of your business towards e-commerce, is it really profitable and sustainable? Or because it's always a situation where you move into or you pivot into an e-commerce business, all right, for many other business or even tech companies who tries to move into an e-commerce platform. The cost of pivoting into that and also to start an e-commerce business are really high, right? So just your thoughts and your sharing about a little bit in terms of what are the costs that it would take to actually acquire customers towards e-commerce.
Yeah, it's definitely I guess condition that was caused by venture capitalists. The fact that you're going to build these businesses and pour money just so that you are gaining market share no matter what, this growth at all costs, and without taking a look at the fundamentals. So I think there's been a more recent shift back to the fundamentals. And so I guess when it comes to e-commerce, it really has to boil down to the cost of serving that customer, and the demand and the cost of acquisition, right? If there's so many players out on the market and you're spending more than you're earning from your customers, it becomes a capital gain.
Yeah, is there a specific category or certain margin that you need to have before considering moving a business into e-commerce?
Yeah, I mean, e-commerce is the future, right? That's where the growth is. That's where people are going to expect to buy things. So retail is whatever eroding of retail that's happened over the last few years. It's completely accelerated. And so if you're not selling online, you'll be out of business soon. But so you have to go on
the logistics side of cost, because I think like one of the biggest challenge for us in Southeast Asia is the logistic cost, right? It's really high. So selling it online, but to fulfill the order, it's big bulk of the cost in making that to happen, right? So just maybe you can share a little bit in terms of what kind of cost structure or margin that one need to have in mind before entering into a into an e-commerce business. Yeah.
Well, it's hard to answer that because you're really looking at it across many different categories. A broad play like here in Vietnam, they have Tiki and Shopee. I know a lot of those companies are burning through money. So the idea here is just to get into the behavior that's forming now, so that you are the dominant. You're the Amazon of the region. But if you isolate that and just particularly look down and say, hey, I'm going to start selling coffee online, or I'm going to start selling watches, they're going to vary widely in margins, even insurance and other aspects. But yeah, it's definitely something, an exercise you do want to ask yourselves, like, am I going to compete with these big behemoths? And our customers are they going to find it very hard to differentiate buying from Shopee versus my store?
Jeff, I was just wondering the motivation behind your questions. What's been your experience with e-commerce?
Well, we tried to pivot during the MCO period, or the COVID-19 period, when our revenue came down. Immediately we had a lab, and we tried to put on some products and pushing it into our consumer market and using some of the experience that we have in digital marketing and so on. And we realized that logistic is a major problem. Even before COVID actually happens, logistic is already a nightmare. So during the COVID-19 season, we see the logistic players are even having a bigger nightmare. So when you order things, it may take weeks, and the cost of shipping is actually very high internationally. So we realized that perhaps it's only domestic e-commerce that we can do, and as well as we need to have a certain margin in order to make it feasible, right? And in the end, we did not go on the physical products kind of e-commerce, and we are looking more towards the digital kind of products that makes more sense for us, because once it touches logistic and when you don't have sufficient margin, and of course you need to have certain inventory costs as well, to start an e-commerce business. So it's a whole new business model, and it's really costly for us to pivot to it without having a full picture of the entire business model for e-commerce. And as far as my research, as far as I know, and I share the same sentiment as Binh, that many of these e-commerce platforms are actually burning money and just growing market share, and going in there and competing with them at this stage, it's really just going to shorten our runway even faster. Yeah.
Binh, are you involved with any e-commerce companies?
Sorry?
Binh, are you involved in any e-commerce companies?
Yes, we have some e-commerce companies. We had a e-commerce company focused on luxury, and they recently shut down. So again, I think it's less. It was less around unit economics. It was more just around bad planning. They had stretched themselves too thin, entering multiple markets. Mm-hmm. But I think one silver lining to going online is that because consumer consumption has gone down, and consumer consumption is advertising is a function of consumer consumption. Advertising has gotten cheaper. So to acquire that customer, to create that Google AdWord or Facebook ad, it's actually cheaper to get the customer now. Mm-hmm. So you might want to count that into your modeling, Jeff. Mm. When did you start planning, Jeff, around this kind of shift?
We started somewhere around February, and as in January we saw a 50% drop on our daily sales, and then in February we see 70% drop, and in March we see a 90% drop. So it was a gradual drop for us because of our global business. We were doing about a revenue run rate of almost 10 million. So it's really painful when we see that drop coming down, and we started looking at new revenue streams to compensate whatever revenue loss, and looking at various products and services that we can actually retail back to our consumers. And ultimately, we decided not to, and we had to let a big chunk of our people on a furlough basis at the moment, just to keep our cost of operation down. Obviously, we cannot have the same level of operation when we are doing about 10 mil revenue. So we have to scale down to where it is now, and then start looking at a potential pivots that we can actually move on to bring in some new revenues. So that's where we are at the moment.
Yeah, I'd love to understand that, because that might be useful for some of the listeners. Is, what are those assumptions that did you make, and how did you model out those outcomes to arrive at, hey, I need to do this kind of fundamental pivot, which is fundamental,
yeah,
as well as how deep of a cut do I need to make?
Yeah. I would say we were more in the category of severely impacted. So when we did a model and we did a cash flow, and I look at the daily cash flow, right? It's making tough decisions every day, right? And we realized that understanding our runway, with the 90% revenue drop, what's our runway going to be like? If 50% drop, what's our runway going to be like? And whether do we see that the next 3 months the recovery is going to happen back or rebound? Is a V curve or U curve recovery? With those scenario planning, we realized that we need to take drastic action in order to survive. So we did many rounds of haircuts, right, to get ourselves in a position where we can have some sort of a stable operation with a 6-month runway in order for us to really start strategizing and look at what are the core competency that we have, what assets do we have that we can actually move in and potentially bringing in new revenue. So it's going to be back to day one kind of a mentality for the team.
Yeah. So carry on, Ben.
No, I was just saying, you mentioned the V and U kind of recovery models. There's the V is not realistic anymore, but it's really the U and the L, right? So you have the U kind of slowly coming back over the 12 to 18 months, and the L-shaped recovery is potential as well. So that's multi-year, multi-level type of recovery.
I remember in January, we were all still thinking that it's going to be V because it's only China, right? So I still remember booking a holiday with my wife that we're going to celebrate our anniversary this coming July, right? So we were still very optimistic about what's happening, right? It's only until somewhere around March that the whole world is going through a lockdown, right? And then we realized that, it's not going to be a V, right? It's going to be much longer, and it's going to be much complicated than we think it is. And we have to make some really, really painful and drastic decisions to move on.
Yeah. So it is painful, and you did make some interesting decisions, Jeff. And but before we get there, I just want to very quickly tap on Bin's mind. So we talked about a little bit about having to pivot and to move to a different direction. Someone said something very interesting to me recently. He said that, the last time he used the word pivot was in a physics class back in school, and he's never since heard it being used. And today it's like used practically several times a day. So the issue of pivoting is vital. It's fundamental for businesses. What are the keys, you think, and what are you telling your investee companies about pivoting? Yeah.
Well, pivoting, anytime you shift a organization to a new goal, you're completely throwing away potential quarters of work, right? And so it has to be done with some level of certainty or out of necessity, right? So I think pivoting it's a bold move, but bold moves reward those that make it. So one of my most successful angel investments, I invested in 2012 in a company that was basically a platform for recruiting designers, and they were growing okay, but then they took the tools they were using to help recruit the designers and sold them as sales tools. And within 5 years, they reached $100 million in revenue. So I completely lucked out. I invested in a company and team that was doing something completely different, and they pivoted. And so it can be a huge saving grace for companies. But obviously, it's only agile, young companies can do that. So I'm very impressed, Jeff, that you're able to pull that off for a public company with hundreds of employees. So
yeah. And Jeff, you decided that, I mean, there was a couple of pivots really during the last couple of months. So you pivoted to an e-commerce model, didn't work, and then you realized that you needed to pivot again, and this time you decided to enter the enterprise market. Tell us a little bit about that.
Well, just to add on to Binh, although we are a public listed company in Australia, we are no different from any startups, right? Except that we are being more transparent and more compliant to our investors. And yes, it is a tough decision for us to make, but more so, right, that being public listed, we need to have those risk mitigation strategies in place for things like this to happen, right? In the pivoting process, I realized that we don't just pivot for the sake of pivot, but we have no choice but to find new revenue streams. And we had some really interesting discussion in terms of whether it's going to be a complete scrap, right? And then there's many type of pivot, whether you want to take it and scrap it off, or we want to put it on a hibernation mode, whereby we just tell our customers that, hey, we are going to be back 6 months from now, right? We are going to temporarily shut down for now, right? You can't use the service until the next 6 months, or we are going to go on a cruise mode, which is what we are right now. We still serve some travelers who are traveling for whatever reasons. They could be in the healthcare sector or in the CSR services, right? So we still open for business, but in a very, very lean operation scale. So it take longer time for us to respond to customers and so on, right? So, but there is definitely a cost if you take on any of these action, because it's going to cost you a lot of money to just shut down certain business or even to hibernate certain business, right?
So
and
what
at
did
the
you do then?
some resources to look at new businesses as well. Yeah.
Yeah, so that was what I was trying to get you to. What specifically did you pivot to in the area of the enterprise market?
So for us, we look at our core competency. As I shared, we were in the travel and we were in the telecommunication business. So when the travel is down and we look at our core competency, which is in the telecommunication, and we have got the connectivity globally, and we have access to telcos all around the world, and we actually look at that and we built a platform for Internet of Things. So now we realize that in the new norm, or at least in the post-COVID, many more IoT plays an important role in the new norm, right? Where people are going to rely on devices for their day-to-day life, be it for lockers, for collection, for e-commerce, contactless payments, and all these devices need to have internet connectivity, and that's where we are trying to shift towards. And we started to make some new development and prototype and trial with some potential customers over the past 1 month.
Binh, any ideas on how he could work on that idea? Do you think it's a good idea?
I do. I think that there's definitely one of those categories that what isn't going to go back to its original form, and one of those is remote working, right? So our company in San Francisco is saying, hey, you stay home for the rest of the year. Salesforce is doing that, Twitter. So a lot of these companies are just realizing, hey, people can be productive anywhere, right? If there's an opportunity for you to go to the office because you have a loud roommate or you have kids at home and you're more productive in the office, so be it. But I think a lot of folks are going to have these flexible schedules and find themselves in coffee shops, find themselves in the park. And so having connectivity through these devices, I think I see that demand rising, just fundamentally because that's a new behavior for remote working.
Right. Let's focus now, Ben, on your future and where you're pivoting to as an investor. So, is it realistic in this environment to be looking at the kind of exponential growth that you've been looking for, or are you now perhaps focusing more on sustainable growth?
Yeah, so good question. I think for me, as an early stage investor, not much has changed. I mean, there's an immediate effect for most investors that, for the last couple months, we've been just incredibly busy helping our existing portfolio and communicating to our LPs or investors on what's going on. But people who have capital deployed, they're very excited about deploying that capital over the next couple of years. And I'll tell you why. So let's talk about the capital. Over the last few years, and even as during COVID, you're seeing these massive funds being raised. So you have a record number of funds and a record amount of capital, venture capital, being available to invest. And so, number one, that's a great thing for companies that are starting out right now. However, I think there was a need for correction. You're talking about in Silicon Valley, a lot of the investors are expecting Series A size companies, which are sometimes right now anywhere from $30 to $50 million in valuation, going down to $15, $20 million. So you're really seeing a drastic drop in valuations as well as potential round sizes going back to 2010, 2011 times. And so if I'm investing, I'm one of the first investors in a company, I have to be aware of what the downstream investors are looking for. And if they are looking at lower valuations and they're looking to deploy at a slower pace, and pacing is important because a lot of these investors at the later stages, they're sitting on your boards. They're investing in maybe 15 companies a year. And so they're spending a lot of time with you. They're spending a lot of effort and due diligence and reference checking before they make an investment. And with travel being locked down, that means, are these Series A investors, Series B investors, are they going to be able to, close these deals? So I have to think about, if I'm going to write a check into a company now, do they have the time and runway to get to the next stage? And are they capitalized in a way that they're not overshooting themselves or shooting themselves in the foot when these investors come knocking on the door? So I'm still deploying capital, but we are fundamentally taking a look at evaluations, doing a little bit more diligence around valuations, and then looking at longer runways.
Okay, so let's play out a scenario. If I'm a startup and I'm approaching you right now and I need some funding, what do I need to show you?
Yeah, so 6 months ago, it was often for many investors, it was just enough of ambition and an idea, right? Things have changed drastically. I mean, when I was fundraising in 2009, it was not just like very big ambitious ideas, but it was traction. You have to show both. So it's not just the hope that a company will do well; it's the hope and the validation, right? That you are seeing something that works. And so I think it's going to weed out a lot of folks who were trying out being a founder. It's one of the things in Vietnam that I'm excited about is that not excited because of the pandemic, but excited to see more founders. People have been laid off, and if you're a software engineer working at a company with that idea that you're planning to work on weekends and nights, but all of a sudden you've been laid off, and no one's hiring, and you've got a bunch of free time, what are you going to do? You're going to make that app. You're going to make that piece of software. So I'm excited to see that start to happen here. but yeah, it's going to be a tough time to fundraise, and tough time to find customers.
And tough time for you as a VC to find investee companies to be investing in, and the rate of growth of your portfolio companies will have to slow down.
Yeah, I for us, pattern matching, right? If we have a bunch of great founders come through the door tomorrow, I'm not going to say, oh, I'm only investing one. I'm only expecting to invest once, one company per month. No, if they're amazing 10 founders, yeah, I'm going to want to invest in all of them. But
what makes for amazing?
Oh, wow. So I guess from the pattern matching we see with companies that are doing really, really well, it's the folks that they're just so determined. They want to go through a wall, just punch through a wall to get to their goals. And they're still have a mindset where they're, they know they're still learning. And so there's a coachability about it. And they're just naturally, natural leaders. I mean, people feel like they want to work for them. They want them to lead them in their career moves. So at the stage where we invest, where don't have a lot of validation in revenue or customers, a lot of that is going to be leaning on those kind of softer qualities of a person. Their determination and their ability to just lead and convince people to join them in their mission.
Are there a specific sector that kind of in your blacklist, and there are specific sector that it's something that you would really like to have a look, you're interested to look because of the sectors they're in?
Yeah, so I wouldn't say a blacklist, but definitely like airlines are gonna have a hard time. But I think there's some exciting blank slates out there, things around conferencing or telemedicine. The whole idea that you're going to go and pre-COVID make a phone call to the doctors, spend half an hour driving to the doctor's office, get exposed to a bunch of germs as the doctor's an hour late, so that they can give you some kind of prescription medicine. That's ridiculous. That's gonna go away. So excited about telemedicine. I think one of those behaviors that will fundamentally change and stay changed is grocery shopping. I mean, not the entire behavior of grocery shopping, but definitely some components of grocery shopping. But there's definitely a lot of things that don't change. Just your need to eat and socialize. Probably
and have coffee.
Eat coffee, to have coffee, buy clothes, have a good education. So I have to think out long term. 5-10 years, the companies that lead, that become market leaders, what are they serving? And so it's really hard to predict out there, but there are some safe assumptions.
Is Southeast Asia still some kind of a potential for the global investors to look at? Like, for tech companies like us, should we be focusing just on the domestic approach, or should we look at a regional approach or a global approach moving forward?
Well, it depends on the investors you're going after. So venture investors have a different set of constraints than, say, private equity or banks or debt investors. So for us, we are looking for market leaders, and that means scale. There's nothing, it's quite amazing you're able to build a business, a $10 million business, without any outside capital. I mean, that's an amazing feat. And there's certain businesses there's many businesses that don't need venture capital, and sometimes it really depends on the founder and their appetite for growth. So VCs, not the answer for everything. I think Southeast Asia has enough scale where there are VC scalable exits and enough interest there. Collectively, Southeast Asia is still only 5% of the U.S. Tech markets, and so it needs to be priced correctly. And so that's something I'm excited to see, because we're seeing seed companies in Southeast Asia raising $2 to $5 million in seed round. That's just ridiculous. You don't need that much money to build and validate early stage of a business.
Yeah. So, Binh, would you consider on a personal basis to invest in FlexiRoam, Jeff's company?
Yeah, I'd definitely take a look at it. I mean,
Yeah.
opportunities in general. That's a thing. That's an amazing thing about venture is that you really have to just meet the person and see what's in their head. Sometimes you come across the next Jack Ma.
Indeed. So you can continue the conversation after this. So time is running out. So I just want to end off with perhaps a more contemplative question. And you started Klout, which was your runaway success. It was your most notable success, Klout, back in 2008. And of course, Klout was started. 2008 was the global financial crisis. Your most successful company was started in the worst of times. And yet again, we are in the worst of times, even worse, many people say. So what advice would you give to business leaders at this time, lessons that you had learned starting your company at a really tough time, and for those people who are either starting their company at a really tough time or just trying to get out of this mess?
Yeah, I mean, it's really hard for me to put myself in their shoes right now because the downturn this time is just so much. It's another level compared to the global financial crisis, and they're the leaders like Jeff. They're making these tough decisions. I mean, my heart goes out to you. It's one of the hardest things you can do as a business leader is cut people's jobs, especially when it's during this time where they may be needing it to put food on the table, right? If you survive, I mean, the ability to survive, you're going to come out as a natural leader, just amazing. If you don't survive, I think there's still an opportunity for you to showcase. I mean, if I come across a founder whose business went under during the pandemic, but they were making decisions out of great values, they're being transparent to their customers and their team and their investors. Those are amazing signs that of leadership that I want to invest in. And those are the types of memories or decisions that's going to live with you for the rest of your life.
Absolutely. Well said, Binh. I think what impresses me about just talking to you and over the years as well, it's the fact that you're not just a capitalist, which normally has a very negative connotation, but you're a human, and there is, I hear the compassion, I hear the consideration in the tone of your voice and in your choice of people that you invest in.
There's no shark in Vietnam, so sharks only exist in US, but not in Vietnam.
So you're in a good place, Binh. You've found a good home to settle in. So at this point, I just want to say a very, very big thank you to you, Binh. You've been so generous with your time, with your thoughts, with your ideas. I know that your day is chock-a-block full. You've got 60 companies to oversee. You've got a young family to look out for. And yet you have been able to carve out this time for us and for the rest of the world to get access to your thoughts and your ideas. So for that, we are so, so grateful. Thank you so much. I wish you all the very best, and better times are yet to come, Binh.
Thank you for having me.
All right. And also to Jeff, thank you so much for coming on and sharing your experiences. I think, your vulnerability and I think just being real, the fact that, everyone is going through what you're going through. And thank you for just putting yourself out there and contributing to a wonderful conversation, Jeff.
Yeah, thanks, Karen, and thanks, Binh, for sharing a lot of good insights and tips as well. I've learned so much from this session. And to all those who are joining this session now, it's not the end. It's always better tomorrow, and I look forward to ride this storm together with all of you. Thank you.
Eat cockroaches.
Indeed, well said. Hope is what we need at this time. Hope for our hearts, good ideas for our minds, and I certainly also wish all of you good men and women who will be your hands and feet, who will stand with you during this time, because the truth is we are only better and we're only stronger when we can stand together. So stay safe, everyone, mask up and carry on.
Take care.